Hi, Jessi. How are you doing today?
I'm very good. Yourself?
Very good as well. Thanks. Um, can you tell us a little bit about your background and the group, and then we'll get into some questions and share with the audience later.
Uh, yeah, of course. Well, in my background, I started in the business in hospitality before school or during school, working in operations and studied in finance engineering and then finance, and made my way through the bank at G Capital early on, and now with Colliers. So I've always been in hospitality in some way, and finance and on brokerage. And our team at Colliers, we're a group of eight. I'm based in Montreal. We have four guys in Toronto and three guys in Vancouver, and we, like you said, specialize in hotel brokerage across the country.
Gotcha, gotcha. So my first question for you is that your group has been one of the leading pioneer groups in terms of investment sales as it relates to the hospitality sector in Canada, right? And there's probably no better person to ask this question than somebody from your group or you. Is that you've seen over the last few years ADRs gone up, occupancy levels gone up to sort of record highs, and now you're seeing the record lows, at least in our lifetime, I suppose. My question for you, Jessi, is that is there any anecdotal evidence that you can share with us as to what is happening with the hotel industry today in terms of any alternative use or opening up certain hotels in a certain way in certain markets? If you can share anything that can give some that can show some light at the end of the tunnel, and maybe it's an early example, but something that shows that how will the hotel industry reopen over next 3, 6 to 12 months.
Yeah, well, look, first, you're right. 2019 was a great year. The past decade was a phenomenal decade. We went from $13 billion of transactions the prior decade to $20 billion of transaction in the last decade. And 2019 was a sixth best year on record for volume since 1985. So we've seen a lot of great momentum in our business. So it is very difficult to live through what we're going through right now, and it's unprecedented. You made the comment like we've never seen something like that. You've heard there was an interview with the CEO of Hilton early on, and he said we've never shut down a hotel other than for major renovations or tearing it down. So we're now, according to, and the stats are moving, changing, ever evolving, but the Hotel Association of Canada said that over 50% of the hotels were shut down. Now we're starting to see some hotels reopen, and which is a good sign. And it's the season too, right? Summer is a very important component of the year for hotels, and hoteliers are reopening for. I think we'll see some local tourism. People can travel outside, so a number of provinces have been pushing local tourism. So we'll see that. But it's going to remain difficult in major city centers. Larger full service hotels with group business will probably take longer to recover. We are there are definitely discussions out there. So number one, on the operation, you see some day to day, you'll see some tourism, but also government is booking blocks of rooms in certain hotels for a variety of reasons. And there are discussions out there for conversions, and we've seen it before. Sometimes older assets or assets that were going to be repositioned, when you hit a downturn like this, it becomes more logical, and we've seen it in all major cities. So yeah, I think we'll see some movement like that in the next few months. Now, this thing started mid-March, really to impact us significantly. We saw occupancy levels at their lowest point ever in April, around 12, 13%. And that doesn't even count for the hotels that were shut down. This is operating hotels, so anywhere between 3, 4, 5% and 10, 15, 20%. So it it is a real mess for hotel owners out there.
Right,
And
right. So on
hopefully
that
there's going to
topic,
be some recovery in the summer and the fall, right? That's the hope.
so if we were to just sort of talk a little bit more about that in terms of the supply of both equity capital and the debt capital into this industry over the last 4 or 5 years since 2015, there were some really large notable investments made by Chinese families, large institutions. I remember one deal, which was the Silver Birch portfolio, 25 Marriott's and Hilton's, including and Delta, sorry, including the one downtown Toronto and Bremner.
Yeah.
Was $1.2 billion. It was one of the largest asset sales in history of Canada at the time. And I actually worked on financing of that transaction. I was at JLL back then. And then obviously Invest, right? Privatization of that. So where does the trend for foreign capital come in now? And obviously the Chinese and Canadian government relations are not at the peak by any means. If anything, they are the exact opposite of that because of obviously the Huawei issue and some other challenges in the recent past. So question A for you is, we saw the peak in the past. Where is the level of interest from the Asian capital, or even European or American for that matter, coming into Canada to perhaps see some distress in Canada to take opportunity out of that, as well as part B, maybe we'll tackle that later on after you answer the part A. The part B is on the lending side. So let's pause the lending side for a minute. I'll let you answer the equity side of the question first.
Yeah, well, we saw, I think we could call the last decade as a significant influx of capital in our business. People say a legitimization of our industry because of the institutional capital that we saw coming into our space over the last decade, which was also a driver of the volume of transaction that we saw. And the other point that you made, on top of institutional capital, we had quite a bit of foreign capital coming into our industry. And some years you saw 15, 20, 30% of the transaction volume being foreign investments, which was not something you would have seen in the prior decades. So it was a big influx. A lot of people that did not typically look at hotels. So, and that's why you saw such an improvement in the metrics. Now it's hard to answer the second part of that question. What's going to be the impact? Clearly, Canada and hotels, or certainly Canada, was perceived as a safe market, very stable long-term market. Our banking system is stable, the politics. So and that's probably one of the key reasons why you saw so many investors come from outside or from other asset class. A lot from, like you said, Asia, Middle East. Right now, there is no transaction activity. There's probably a significant, and I say probably because we don't have a whole lot of basis for it, but there's probably a pretty significant gap between the bid and the ask, which is something we did not see for the last, I've been brokering for 6 years, never seen something like that. So until there's a concept of discovery of where pricing should be, I don't know if foreign investors are going to come in. We are certainly going to remain a stable market. We will see the end of this. It will come around. But right now, there is uncertainty around two things. First, how fast do we see a recovery? When do we hit the bottom? I hope we have. And how fast is it going to ramp up? Is it going to take 1 year, 2 years, 3 years until we go back to where we were? So until we have more clarity around that, and then the last point that you're trying to get to, the debt side, it's another big question mark right now. And I'll let you ask your question, but that's also
on the lending side, really, Jessi, the question is that we've been very active in the past, financing a bunch of hotels, limited serve, full serve hotels, and as you know, there was a fair bit of debt capital, up to 70, some cases even 75% loan to value available, oftentimes at 65%, and there was really no shortage. If you had a flag, and if you was in a sort of an okay market, even secondary or tertiary, financing was available. Some of the larger banks were doing it. Foreign banks like HSBC were in this fray. There, Desjardins, Caisse Populaire, Laurentian Bank, and even some of the credit unions locally across Canada were quite active. Um, that is not the case today. But again, it's also not the case for retail. A lot of lenders are allergic to retail right now. A lot of lenders are not seeing office as a very favorable asset, especially larger Class A, B plus assets in that sort of the downtown core and high density areas. But hotel certainly has taken a big impact. Lenders have been very cooperative from what we understand. The principal holidays, as they call it, up to 6 months in many cases. But my question to you is, what happens at the end of that 5th or the 6th month when the occupancy levels are still at record lows and these hotels are losing money on a daily, monthly, weekly basis? How long do you think the patience with these lenders will last? And how much, I don't think there is any doubt that distress is coming. The question I have for you is with respect to lenders getting out of the space and not extending the holidays over next 6 months or really next 3 months now, how much distress you see coming to the market?
Yes, it's not an easy question to answer. Like we've seen, like we said, a lot of new lenders coming into our space, new lenders, existing lenders, but building a platform to finance hotels, which was phenomenal because it did help quite a bit to the liquidity of our market up until now. A lot of not only these lenders, but even the lenders that were there before are facing unprecedented time. And if I put back my lenders at the only thing you want right now is for your borrowers to call you and tell you, here's what's going on. Here's my plan for the next 3 months, assuming you're, of course, it's hard to put a plan together, but here are my liquidities, here's what I own, and here's what I'm doing. So the bank gave anywhere between 3 to 6 months break, capital and interest. And at the end of that period, coming back to my point earlier, there's going to be some recovery potentially in the summer, hopefully more in the fall. And the hope is that 2021, we see, when you look at all these reports from HVS and all these groups, they are pretty confident that we're going to be back at a profitability level in 2021. So the lenders are going to, for the most part, I think, be patient and work with their borrowers. But there is no doubt that if, and it's hard to quantify, but if we get to the fall and there's not enough recovery, you're going to see some distress out there. Good news is for the majority, and like you said earlier, we've never seen much more than 70-75% loan to value. And for the most part, it's more 55 to 65. So lenders, borrowers are well capitalized, and there's a lot of equity in the market. It's just right now, the bid ask is wide, so it's hard to quantify that.
One question on sort of competitors to the hotel space over the last few years, Airbnb, Sonder, obviously they're struggling as well. They've had some regulatory hurdles in the recent past, and then there was some crime violence issues in one of the Airbnb properties here in Toronto that became a big issue. But now they've been hit with COVID like everybody else, though, right? So question for you is, do you think this could be the end of some of those platforms, or you think they can emerge out of this in a similar fashion as the hotel industry?
Well, like any, like hotel owners, these owners or operators are going to have to rationalize their operations. And, it's out there. Like, a lot of these guys are going back to the traditional residential market, which was quite strong. So I think you'll see some units go back to the more traditional residential use. Which is probably going to be a positive for hotel operations. overall, it's not the same capital structure.
Right.
A lot of guys have a lease and they rent a bunch of units and they sub rent. So, and now I think the cities really came a long way structuring regulations that would be more fair for looking at the hotel operators, looking at the Saunders of the world and the Airbnb platforms. It was there was clearly a gap, right? So, and it was addressed. So yes, I think just like any other hotel players, because they became a real competition in the last 5-10 years, definitely in the last 5 years. These guys are also suffering. But what I've been hearing a lot is, like I said, a lot of these guys are putting some units back in the resi market. So that's probably one way to do it. And thank God that market is still, from what I hear, quite strong.
Right. Okay, so we got time for one more question, and the last question I have for you is, what is your prognosis when we come back? How is it going to look like, and what is your sort of time frame associated with that looking like?
Well, I'm looking forward for my favorite pub to be open again. I thought that was going to be.
I'm with you on that one.
Good news is the coffee shops are reopening. When the coffee shops start to reopen and hotels are starting to reopen and people go back in the streets, I think it's already a good start. In terms of time frame, I could throw you all sorts of days that we're hearing, but it's very difficult to figure out how fast the recovery is going to be, because there's limitations. You don't know what business travel are going to look like. You don't even know about regulations, how it's going to work. And also there might be a bit of a shift in culture and the way people do things, right?
Right.
So my hope is to see some recovery in the summer and the fall, 2021 back to profitability. And then you'll see maybe limited service, focused service hotels resurface obviously faster. A lot of people say that it might take up until 2023 before we see the results of 2019. And I think the transaction market is going to follow that as well. We're going to see less transactions, of course, this year. And a number of players potentially next year are going to start rationalizing their operations. So you'll see.
On that note, do you think there is any possibility of some of the hotels being converted into different kind of use, retirement, student housing, or just pure multifamily? You think, is that a way for some of the hotel industry operators to kind of work their way back over next like you mentioned, 2023, right? So there is a 3-year gap there, and to sustain the cash flow of the mortgages. Yeah. Any comments on that?
Well, I think that timing will be a function of the market and the type of asset that you own, like I said. But if you're located near a university and you have a building that fits the criteria of a conversion, we've seen it before. We'll see it again. We in Montreal, there was a conversion of over 2,000 rooms in the last decade or 12 years. So we'll see that again. But the properties that are fit to be hotels and were recently built as hotels are going to keep operating as hotels. It's just going to take some time to ramp them back up.
Agreed. Okay, well, on that positive note, let's finish off the conversation. Appreciate your time. Thank you so much. And look forward to chatting again in the near future. All the best.
Thank you, Amar. Thank you. Appreciate your time.